Hello and welcome. My name is Suzanne McClain. Okay, so what we're going to do is we're going to get started here. We're going to talk today about the 3 ways that you can possibly lower your Part B premium. Okay, so here's kind of the call. I get a lot of calls with people generally that comes in around January, February, and what they say is, hey, Suzanne, I know the Medicare Part B is going up or it's changing. Is there anything I can do about it? So really what we wanted to do is just kind of go through in a deep dive, talk about the Medicare Part B. If you're paying more than the $170, is it still legitimate that you're paying more than the $170.10 for it? So let's start off with how your Part B is calculated. Okay, so the next slide here, we're just going to talk about, and I'm going to make this so you can see it a little bit bigger. So when you sign up for Medicare Part B, what happens is the Social Security Administration pulls your income tax return. Now that tax return that they pull is always from 2 years prior. So in January of 2022, they pulled your 2020 tax return. So depending on the way that you filed in 2020 is how they determined what your 2022 Part B premium was. So if you, for example, was filing, let's say you filed as a joint, filing jointly as a joint couple, and you made less than $182,000, then you pay that $170.10. Now, let's say that you're married, but you filed separately. Then, as you can see, if you're 91,000 or less, you're at the $170.10. But if you made over 91,000, you're jumping clear up here to the 544 number. So it is extremely important how you file. So that is the way that the Medicare determines what your Part B premium is going to be. All right, so let's go to the next one here. And I get questions sometimes like, well, I don't know if I'm going to be subject to the Part B IRMA, which IRMA, the IRMAA stands for Income Related Monthly Adjusted Amount. So the acronym is IRMAA. So I've had a few clients when I talk to them and we talk about how much money they made, they're like, well, how will I know if I'm going to be subject to the IRMA? So here's how you're notified. You actually receive a letter from the Social Security Administration. Now, when you get that letter in the mail, the letter is going to basically say, we've pulled your income tax return and you made, let's use the example 2020 because we're in 2022. In 2020, you made X number of dollars. Your IRMA or income related monthly adjustment amount is going to be X amount of money. So you don't have to worry about it because they will notify you from the Social Security Administration if you're subject to that IRMA. Okay, so I've had some clients that will say to me, well, here's the deal, Suzanne. Yeah, in 2022, I was still working. So I made 200,000 or I made 400,000, or maybe I sold my business and I made $1 million, but that's not realistic going forward because now I've retired or I've quit working, or maybe I've dropped to part-time and they're basing my Part B premium off of what I was making back in 2020. So I have a picture here of this appeal form. Now, this is a Social Security document. It's not a document that I can give you. It's a Social Security document. Now, with this document, you can fill out what they call a type of life-changing event form. Okay. So if you look at this form, let's say that, you got married, let's say you had a divorce or a death of spouse or a work stoppage, work reduction. So let's say you were working full-time. Now you went to part-time, loss of income, loss of pension, employer settlement, the payout. Those are some of the life-changing events that will allow you to appeal your Part B premium. Now, here's the deal. We can't help you or fill that form out for you because we don't work for the Social Security Administration. What we can do is we can email you a copy of this so you know exactly what form that you need to fill out. So once again, you can use this form to appeal any of those life-changing events. And like, really, to be honest, the biggest one I see is, people that were working full-time and now they're retired. So their income was significantly higher 2 years prior. So once you get this form filled out, there's a couple of ways that you can handle it. You can either drop it off at your local Social Security office, because now the Social Security offices are back open for in-person, or you can fax this form. Now, once again, we cannot really do anything to help you get that done because it's through the Social Security. The Social Security office is the one that is going to either approve the appeal or not approve the appeal. So, and here's the other thing is we cannot do an appeal, or you cannot file this appeal form unless you have been assessed that Part B IRMA. So you have to have received the letter from the Social Security stating that they're going to assess you the adjustment, and then you can do the appeal. Now, here's another thing that I'll tell you is sometimes you have to appeal it 2 times. So basically 2 years in a row. So let me give you a scenario. So let's say that in 2022, right now, you're appealing your 2020 tax return because in 2020, you were still working. 2022, now you're retired. So they're going off of your 2020 tax return. You need to go and appeal it and say, well, I had this life-changing event. I sold my business. I sold my firm. I, just retired. You have a life-changing event. Well, what's going to happen is in 2023, so next year, guess what they're going to pull? Your 2021 tax return. Well, your 2021 is still going to show that you've made higher income. So once again, you're going to have to reappeal for the next year. So a lot of times I see people that has to appeal 2 years in a row. Here's the thing. If you do not appeal it the second year, they don't know that your income went back down. So you're going to get charged that Part B premium increase, and you're going to have to continue to pay that until you appeal it the second time. I see I have a question.
Yeah, Suzanne, you talked about appealable, like life-changing events. Are there certain non-appealable events?
That is a great question. So there are some things that are non-appealable. So for example, let's say that you decided to take money out of your retirement accounts to maybe do a kitchen facelift or a bathroom facelift, or you've taken out, $50,000, $100,000 and done some repairs to your house. Or I even had a client a while back, 2 of his daughters got married the same year, poor guy. And he pulled money out of his retirement account to pay for those weddings. And so when he pulled the money out of those accounts to pay for the weddings, or like I've had other people do repairs, those things are not appealable. So when the Social Security Administration pulls your income tax return, and of course you had to pay tax on that money, those are not appealable things. You can't go back to Social Security and say, well, yeah, 2020, I made $400,000 because I pulled $100,000 out for my daughter's wedding. I really only have $300,000 in income. That doesn't work. You cannot appeal something like that. Like I said, the appealable items are typically what's on that. I'll share it here one more time with you again. Oops. Let me show it real fast. Is typically, marriage, work reduction, divorce, loss of income producing properties. These are mainly your appealable things. Now, here's the other situation though. I'm not the one that makes these decisions. This is made through the Social Security Administration. So If you feel that it's something that's maybe questionable, if it's appealable or not, I would go directly to the Social Security Administration and ask them if it's appealable, because they're the ones that actually is the one that's going to either approve or deny the appeal. Great question. Another question for me?
Yes. So we have a question. My spouse and I file separately, and we both make over $91,000. Is that appealable? What advice do you have? Should my taxes be amended?
That is a great question. And we run into that, I won't say frequently, but we do run into it. So let me kind of just show you here. I'll show you this form one more time. And what this will do is show you the biggest difference. So for example, so I had a client come into me maybe about 2 or 3 months ago. And as we were going through the Part B premiums, I was explaining, I asked him how they filed their tax return. Because obviously when we're looking at enrolling in Medicare, we want to make sure that we're taking in all consideration of all cost. So both of them made over the 91,000. So actually they were both at right around 100,000, but yes, they had filed a separate tax return. So if you look here, the separate tax return, and they both made a little over 100,000, their Part B cost jumped up to $544.30 each per month because of the way that they filed their income tax return. So unfortunately, I had to be the bearer of bad news and tell them that it was terrible. Because here's the thing, if they would have filed a joint return, they would have been in this category right here of the 182 to 228, which is $238.10 per month. So you can see that's a significant savings. So as I was giving them this information, I had said to them, well, this is what your cost is going to be based on what you filed. And of course, they come back and said, well, why didn't my CPA tell me this? Well, I don't know. I said, well, your CPA doesn't do Medicare insurance. They know tax law, but I would love to talk to your CPA. So the CPA called me and we had a very long conversation. And honestly, it's not appealable for the Part B. So long, this is a long explanation to that question. It's not appealable to the Part B. But what the CPA and I discussed with the client is it made sense for them to amend their taxes, file a joint return, even with them paying the late enrollment, like the refiling fee, amending their taxes and paying the difference in tax, that difference in the tax savings, they still were ahead like $5,000 for the year. So it's not really appealable through Social Security Administration, but it made sense for them to go back and to amend their tax return to become a joint filer versus married filing separate. Okay. Any other question on that one?
I think we might be, oh, wait, we do have one more coming in.
Okay.
Bear with me for just a moment. Okay, we've got, what if your income is still high in 2021 and 2022? I won't retire until late 2022 with Part B effective at that time. I also expect a large income bonus payable in 2023. Should I make 3 consecutive appeals instead of 2?
Oh, wow. That's a great question. So the answer is, if your Part B, make sure I understand, the Part B is starting in 2022. Is that correct, Pansy?
Yes.
Okay.
So Part B will start 2022, but there's also going to be a large income bonus in 2023.
Okay. So if in 2022 you sign up for the Part B, you can't really do an appeal unless you're going to have it, your income's going to drop. But if in 2023, you're now going to have a bonus come in, then I guess it all determines what amount that bonus is, where it's going to put you in this particular spreadsheet that says which level you'll be at for the Part B premium. I'll tell you what, probably the best thing to do is reach out to me personally and let me go through your specific scenario and see what makes sense for you? Great question. But it's a little bit too complicated because I don't know enough details. So if you don't mind, reach out to me personally. Okay, so let's talk a little bit more about, we want to make sure that we appeal 2 years in a row, because once again, it has to kind of catch up with itself. Okay. Typically your tax return is pulled in December or early January each year. So you're going to get something from the Social Security, either late December, early January, saying if you are assessed this IRMA, saying what your Part B is going to be if you're assessed the IRMA. Now another thing that I get a lot of questions on is, hey, Suzanne, I retired. I've got $20,000. I've got $50,000 sitting in an HSA account. I don't really know what to do with it. What am I allowed to do with it? Well, of course, you've contributed to that through most of your working life, and that is your money. So the IRS does come back and they say, well, you can pay your Part B, as in boy, your Part B premiums with money out of that HSA. You also can pay your Part D, which is your drug plan premiums, out of that HSA. So sometimes I get the question, well, I'm drawing Social Security and that amount is automatically being taken from my Social Security check. How do I pay it? So the way you can do that is if you're drawing Social Security and that Part B premium is coming out of your Social Security check, at the end of the year, I've just had people, 170 times 12 months, they just reimburse themselves out of that HSA. So you can do it that way. A lot of my other clients, they are basically saying, I'm not drawing Social Security. I'm paying my Part B quarterly from the federal government because I'm not drawing Social Security. Some of you may be, paying the IRMA based on your income. You can pay that bill that you get from the Social Security office on a quarterly cycle. If you're not drawing Social Security, you can pay that out of your HSA. So the nice thing is if you have a bulk of money sitting in that HSA, you can pay those Part B premiums out of that HSA. Of course, you can use your HSA for, any type of copays or dental, vision, things like that. But just know that you can either reimburse yourself for the Part B and D premiums or just pay it out of there if you're not drawing Social Security. Looks like we have a question.
Suzanne, this question relates very closely to that. If you want to start using your HSA funds to pay for Medicare Part B and D premiums, can you just have them automatically withdrawn monthly from your HSA account, like an electronic funds transfer or ACH? Or do you have to submit some kind of documentation to prove that it's a qualified medical expense?
Well, the way that it works is with your HSA, most of the time, and I've seen it work both ways. A lot of times you just get like a debit card out of your HSA. And a lot of times we can't do an auto withdrawal just on a debit card information. But if you have an actual bank account number and a routing number, when we do the application for your prescription drug plan, we can put that bank account number and routing number on there and do an automatic bank pull. Now, as far as the Part B side that you pay to the government, the way the Part B is kind of how it works is if you're drawing Social Security, that Part B comes out of that check regardless. But if you're not drawing Social Security, you get a bill from the government. Well, if you want to set it up to come out of an HSA account, you're going to have to reach out to Medicare. They do have an option where you can set up a monthly automatic withdrawal out of an account. You can do that. Now, experience like when I helped my dad set his up a few years ago, it took about 3 months for it to actually start the process smoothly. So when you get your first bill, or if you get a bill from the Medicare for the quarter, on the bottom of that bill, there's a tear off, and it says set up for ease. I think it's called Medicare Easy Pay. And it kind of gives you the directions how to do that. You have to go out, set up an account. And of course, if you have the routing number and account number, then you can set it up out of that checking account. Great question. Looks like we have another question here.
I think we actually have a couple of questions.
Okay.
Okay, so the next question is, you mentioned specifically Medicare Part B and Medicare Part D premiums. What about Medicare Supplement or Medigap premiums? Are those eligible to be paid from an HSA? And also, what about drug costs, out-of-pocket drug costs at the pharmacy?
Okay, these are great questions. So any drug costs at the pharmacy, so like your co-pays, deductibles, anything that you would pay at the pharmacy for those prescriptions, yes, you can use your HSA card. That's not a problem because you're allowed to do that. Now, on your Medigap or Medicare Supplement, remember both of those words interchange means the same thing. A Medicare Supplement and Medigap, you are not allowed to use HSA dollars to pay those premiums. So unfortunately, that's just not allowable. So you'd have to pay those Medigap or Medicare Supplement premiums out of your regular bank account or send in a paper bill. Now, there is something you can do with your HSA if you're on a Medicare Advantage plan and your Advantage plan has a premium. A lot of them do not, but some do. If you're on a Medicare Advantage plan, which is also known as Medicare Part C, you can use those HSA dollars to pay that premium as well. Good question. You have another one for me?
Yes, we absolutely do. Somebody would like some clarification. They say, I am retiring in 2022. When do I start the 2-year look back appeal? 2024?
So if your income is changing and let's see, so you're retiring in 2022, which means when you sign up for Medicare Part B, let's see, so 2022, when your income is changing, it kind of all depends on if you're already enrolled in Medicare. So if you're already enrolled in Medicare Part B, you're probably paying the higher rate. If you retire, let's say now 2022, then what you're going to want to do is reach out, start the appeal saying, yeah, 2022, let's say you're going to retire in October. So from January to October, I was working, I made X amount of money, but now in October, my income is significantly dropping because I've changed, I've retired. Then what we do is we'd start the appeal in October, explaining to them that you retired. So we want the Part B cost to go down. But in late December, early January, they being the Social Security office is going to pull your income tax return again, but they're going to pull that return we're in 2023 now. They're going to pull your 2021 return. Absolutely, we want to do an appeal because once again, 2021, you were working full time. So your income is still going to be high in 2023. Your income's going to be still high in 2021, which is going to show for 2023. So you probably will even have to do another appeal, start January of 2024, because technically we're in 2022 and you're still working. Does that make sense? So if you want to reach out to me on the side, we can definitely chat about it to make sure that we cover everything. But yeah, you're going to probably have to do 3 appeals. So start it now or when you retire. Do it again for next year because they're going to pull your 2023 or in 2023, 2021 return. 2024, they're going to pull your 2022 return and you're still working. So yeah, you're going to probably have to do it now and in 23 and in 24. Hope this helps. I know it's confusing. I'm sorry. So I just want to tell everybody, thank you for taking the time to join us today. If you have any questions, feel free to reach out to our office. We're always here to help you. And watch for our next live cast. It will be in July the 20th at noon. So watch for a text message, an email from us. We'll email you or text you ahead of time. So if you have any questions you would like us to address during that live cast, you can get those questions to us ahead of time. But we definitely look forward to seeing everybody again next month. Have a wonderful day.